Okay. Okay, we have a short on Nasdaq futures market, New York session. I'll set this up. High is 52, so let's go 950. That is my stop. Yep. And let's move this up. Okay, so the first place I would expect to see, yeah, so basically to me in the short term, this looks like it's trending to me, so I'm gonna play it as such. We'll see how it goes. We have, alright, so I guess we'll target the first. I like a short premise as well because there's a gap. There's a gap from the higher time frame that hasn't been completely filled. All right, I'm just trying to figure out here where. Let's make the first exit. Let's make it this candle low here. So we'll go. We have 4 contracts in each. Let's get rid of 50%. Yeah, let's get rid of 50% right here. So this will be our first limit order to get out of 50% of the position, and I'm gonna measure this leg here. I like Fibonacci extension levels. That's perfect. Okay, and we'll go for 18,46625. 18,46625. It's not that far off. That's fine. That is what makes sense to me. Yeah, let's do that. Okay, so we have a lot of volatility here. When I see that, I like to protect the trade early because this would just... What's going on right now? Yeah, looks great. Alright, we're going to put a stop right here. Break even stop. We're going to get rid of this here. Alright, I like the way that looks. We wait. Alright, so I'm trading, what am I trading? I'm trading Apex funded accounts. I am trading 4. I'm trading 300K account and I'm trading 3 25K accounts. And I think we're in a continuation trend in the short term. That's what's happening. I missed a really good move at the open today. Got right past me and it went crazy. Open went dumb stupid. This is the open right here. It's such a gorgeous move. That would have been it for the day. I would have been out of these market streets, no longer taking any risk. Bro, what's up? Come on. Alright, so after I get in a trade, I usually start looking for contraindications to stay in that trade, because I don't want to overstay my welcome inside of any trade. So I think we're okay for the moment, but I may have added a break-even stop too soon. It was very momentous. I thought we were just gonna get more of a straight push, but we'll see. So I don't see any contraindications yet. The only thing that I think that I may be doing wrong is just protecting this trade too early. My belief, especially if we're looking at a continuation trend, you can kind of give those room if your premise is correct, then it should keep going. A lot of times, with the fib extension, it should keep going even beyond the fib extension. But I try to get myself out of the trades before they experience like any major pullbacks. I'm not like a huge fan of like riding the entire wave. Like I'm very okay with letting leaving profit on the table. Alright, so in the 3 minute, we got 1 minute and 19 seconds left on this candle. I usually like to let 2 candles close in my favorable direction that are not touching my entry point any longer before I put a break-even stop loss. But if it looks like, like if I get like just a big move like out the gate, I'll typically protect early, just because volatility doesn't really, sometimes it's on your side and sometimes it's not. So it starts out on your side sometimes and then it can like flip in an instant. So that's just kind of my general rule of thumb with that. "17 seconds left on this candle. So additionally, I will also kind of go back and forth between like a hyperfocus on the 3 and the 5 minute time frame, but then I do like to go back and forth and just kind of see what all, like I like to look at the 10 and the 15 minute time frame. Like all of my charts, I like if I want to know what the 15-minute is doing, then I'm also going to look at the 10. And they're side by side. If I want to know like what's happening in the 3-minute, I'm going to look at the 5-minute side by side in comparison. If I want to know what the 1 hour is doing, I'm going to look at the 30-minute side by side in comparison. If I want to know what the daily is doing, I'm always going to look at the 4 hour side by side in comparison. And so I look for like strong conviction, right? That like if the 15-minute is suggesting one thing, then does the 10-minute also suggest that? If the 1 hour is suggesting something, does the 30-minute agree with that? Or do they look like they're kind of, in opposition with each other? What's the degree of opposition? Is it kind of like the 30 is ahead of the 1 hour, but the 1 hour, I mean, I guess it's very meticulous, but that is how I do it. And I don't really go below. It's rare for me to go below the 3-minute time frame, just because personally I know like tons of people, even the person that I've learned the most from, which is ICT, talks a lot about going down to the 1-minute time frame. I don't feel like it's that reliable. I just don't like it like that. So I'm just not a big fan of anything below the 3-minute. And at this point, I don't even fully trust the 3. Like if the 3-minute is suggesting something, but it looks oppositional in the 5-minute, I'm not going to take the trade. So I've become very, very, very meticulous, very, very picky with the trades that I take. Just because before I used to just think to myself like, oh, losing is normal, and it is. Losses are, you're going to take losses because we're not robots. We're just not perfect. So we are going to take losses even if we have an amazing strategy. But the days of jumping in 800 trades in one singular day, and I mean, I'm exaggerating, but I mean, seriously, like I've had days where I've taken like 22 trades, 11 trades, 10, like I know for some people that's built into their model. They might be a scalper. That might be a normal thing. For me, that is an indicator to myself that like I'm being reckless. And when I experience a loss, that now I look at that like that is a really, really big red flag. Again, I don't expect myself to necessarily be perfect, but I'm not as forgiving and accepting about my losses, because I think that it is a huge red flag, because I have so many rules that like when compiled together, whether it's back testing or the live market, it's like when the market meets all of these rules, it should be extremely rare that I get a loss. So if I get a loss, I probably was impulsive, ignored a rule, I broke my rules in some way, shape, or form, like 9 times out of 10, if not more. So, I'm not super forgiving when it comes to losses, because I'm like, losses are an opportunity to collect data, to make your strategy stronger, to correct whatever incorrect premise you may have had. But I mean, I can just, when I follow my rules, I can probably count on like, I don't even need one hand, full of fingers to count how many times I've ever, it's just rare. It just almost never happens. If I follow all my rules, a loss is like, it really honestly should happen like once in a blue moon. And it should probably be more with like a continuation trend. It should almost never be with like an order block strategy. It's just, there's just too many rules compiled on top of each other. Like it's just, that's a red flag for me. So if I were to get like in this day and age, if I were to, god damn, can you hit my first target? If I were to get 2 losses in one day, like I'm definitely done trading. I used to say that, and then I would just like I just wouldn't respect that rule. But like, yeah, if I were to take 2 losses in one day, I'd be like, what the fuck? That's crazy. What is like? I'd really have to just the rest of the day would have to be dedicated to journaling, back testing, looking at exactly what I did in the market that day, um, and then I'd be like going to bed at like 8 o'clock that day, waking up early. I mean, I would turn into a highly I would turn into a very highly meticulous trader for like the next 1 to 2 weeks because that would just be wild to me. I think I'm getting sick, which is crazy. Everything's crazy. Everything's wild. It's unacceptable.
Order filled.
Yay. All right, let's adjust the stop order here. Or what was it already incorrect? You too. Oh my god, I've done this so many times. I don't think it's gonna matter, but my break-even stop was not what it should have been. I think now it is though. No, it's not. What the fuck is wrong with me? All right, see shit like this. I did this last week. Stuff. All right, I'm gonna have to write myself a note on
Order filled.
like a board or something because that's the second time I've caught myself doing that. Where do I want to put that? Anyway, that was a good trade. Look, people who come here for education, first of all, don't. But if you do, the hold on, I gotta fucking double check break even stop quantity. Okay, more important than pressing the button is the let me just add a disclaimer, okay? Because nobody's gonna fucking sue me when they fucking lose money. Listen, I'm not an educator, not a mentor. Trade at your own risk. I'm not here to educate you. I do not take any responsibility for your trading performance, your trading outcome, all that. Okay, but listen, more important than pressing the button, getting active in the market, like actually taking a trade, more important than that, the structure, the foundation around your trading is more important. So that does include education, right? Like you got to get the education right. You got to have the patience to backtest, even if that means like, I mean, you need to backtest excessively. And you need to understand that if you have a strategy that like you can trade at 75 to 80% win rate or even higher in backtesting, you should expect that number to go down in the live market because now we're dealing with your emotions, and it becomes kind of uncharted territory, right? Once you put your money on the line, once your capital is on the line, emotions are going to affect the way you see the market and the way you trade that strategy. And the hope would be that you keep course correcting over and over and over until you just get rid of, all of the deficits behind your strategy and behind the way you execute it as an imperfect human. So you need the right education, you need patience, you need to backtest, you need to give yourself time in the beginning to like fuck up when you're trading with your real money. It is going to happen. It's just a part of the learning curve. There's going to be very few of you who are going to start trading your live money after coming from a simulation market, and you're just going to kill it out the gate. And even if you do, you'll still most likely go through something where you have a learning curve and you have to get over that. My first month of trading, like ever, I did like $20,000. The next month, I lost it all. And then I struggled to find consistency for years after that. And then for me personally, it wasn't until I found, until I switched from crypto, moved over to futures, which the people that I started listening to, the school of thought was just totally different. No disrespect to anybody that trades crypto, but I feel like the culture behind crypto is like people just throw darts at the market and they're just like, let's just see what happens, right? Or people just wait for a bull season and then they just go for it. The stock market, futures, it doesn't work like that. You need to actually have like a reliable strategy. It's really important. But for me, I did the wrong thing like for years, right? I just had the wrong premise. I had the wrong understanding, the wrong education. And, so like I do preach this, that practice does not make perfect, because I thought what I was doing was right for years until I ran into an educator that I really understood, that resonated with me, which was ICT. And within, I would say 3-4 months, listening to him, watching his playlists, like in an organized fashion, and taking certain series and everything and like watching them on repeat, it changed my trading because it changed my understanding of the market, right? And when I got the right education, 3 to 4 months, I learned more in that time frame, and I became a better trader after getting that information over a very short period of time. And it was like everything that I thought that I was doing and slowly improving at over the course of, basically 3 years, it had nothing. It didn't touch my trading performance once I got the right education. Another thing that really helped me was journaling. Wow, I'm really getting into this whole teacher thing right now. I'm not your teacher, but I'm getting into this right now. But listen, seriously, like journaling, I never believed in journaling. And, like, I remember, like, I met this guy through social media. Like, I just started, like, posting, like, my journey throughout trading. I started talking to this guy. His name is Dave on TikTok. And, luckily I had the privilege of just being able to, a lot of people have allowed me to really just like pick their brain on social media, right? Like I post stuff and people will be like, oh, okay, this is what I would have done in that situation. This is what I think you did wrong, right? And I've learned so much by just like, I guess, putting myself out there for other people to be able to critique me. And then, being willing to listen to other traders that are just better, more knowledgeable, more experienced than me. And Dave, like, asked me on a number of occasions, he asked me a number of times, he was like, where do you journal? And I was like, what are you talking about, journal? Like, I'm like, I don't really do that. And he was like, you have to journal. And, he was like, I journal every single day. And he's like, before I trade, I read my previous journal entry. And he's like, that's just like embedded into my trading process. And so journaling was one of those things that once I added it to like the infrastructure of my trading, it allowed me to actually benefit from my losses, right? All of the data that you need, once you get a strategy that you think is worthwhile, the data that you need is inside of your losses. The data that's going to make you better, that's going to improve the strategy, it's inside the losses. So if you're taking L's in the market, but you are not taking the time to dissect those losses, understand why those losses happen, figure out how you can improve it, I don't know how you're going to get better, because I like to use the comparison of like, it's like a soccer team or like a football team going out there and just having loss after loss after loss, and like never rewatching their games and never understanding what they did wrong, never understanding what they did right. They just keep going out there and just playing, and you're basically playing blindly, right? So if you're not journaling and you're not reviewing your trades, you're trading blindly. And if you're not collecting that data, you're doing yourself a huge disservice, right? So when you hear people say things like, I'm just going to keep it moving forward. When you hear people say things like, like your sleep regimen is important, what you put in your body is important, your mental state, like keeping fuck people the fuck away from you, massively important. Like, I am very, very protective over my mental state. Like, I relate everything right back to trading, because it's just different. Like, when you go to a job and you clock in, it's like half the battle is just showing up. The market doesn't give a fuck if you show up or not, and just showing up is not going to be enough. So, like, for me, if there are people that are exhausting me, they're not going to be in my life anymore. If they're negative, if they're dragging me down, it's not going to be in my life. Like alcohol, I realized long ago I was not going to be able to be a successful trader and drink alcohol every day. It had to go. I realized I was not going to be able to smoke weed every day and trade successfully, study as many hours as I needed to, be diligent about my trade. Like, none of it just didn't fit in with the lifestyle. It had to go. So I'm going to stop talking and I'm just going to leave you with this. The infrastructure around, like the foundation that you set up around your life, around your education, just everything that surrounds your trading, it's more important than you getting active in the market and pressing the button. I promise you. And I know that there is this culture, like if I were to post a simulation trade right now and kill it in that trade, people would be in the comment section like, oh, it's not real money. You know what? Like, please do not subscribe to that school of thought that like simulation trading does not have any value. It holds so much value. In the beginning, it's far more important to trade in simulation than it is to trade your real live capital or to try to pass a prop firm or any of that. Like, you gotta get a foundation down. You gotta get the structure down. You gotta get a routine down. All of these things are massively important, and they all need to come together, right? It's like the beauty of like, like science and art coming together. So please use simulation as your friend. Trade in the sim environment for as long as you possibly can. And, my advice would be like, don't trade your real money until you can flip a sim account. Don't put money into trying to pass a prop firm until you can flip a sim account. Start a simulation account with like $2,000 to $5,000 in it. And when you can double the money, then consider. It doesn't even mean that you need to at that point, but then then consider taking your money to a live market. But take your time and be patient, because like impatience will have you in the market losing thousands and thousands and thousands of dollars. And if you just listen to people that have already run into like all of those, who have already made all of those mistakes repeatedly, just like listen to real traders. Nobody who is like a real disciplined trader is going to tell you like, yeah, go in the market and just put your money on the line and like just go balls to the wall. Like, no, like if you want longevity, if you want to do this for a living, if you want to grow, you need to build a solid foundation. It's more important than getting active in the live market. Okay, I'm done preaching. I'll see you guys in the next one.